Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Now, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar, a second consecutive indecisive doji cross on Friday, as the market is capped by the combined green short medium moving average, which is currently 116.28, and the mauve medium moving average, currently 116.43, plus supported below by the bright red lower bull channel line, currently 115.19, and that's the shallow July to date bull channel. Further below, we have the support to January and February 22 highs at 114.82 and 114.95 respectively. Nearby and just below, we also have the 2019 high at 115.70, November 2020 low at 116.02. I note that November 2020 low was pretty good at the end of last week as resistance. There continues to be one other feature which I need to bring to your attention, and it's something that I've been saying repeatedly now since about March this year. We are set up for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'd be on. Anything in between and we'd have a lesser outside year pattern. As we enter December, it's now time to look carefully at this potential very long-term pattern, and right now it looks as if we are set up to achieve an annual key reversal up. Now, so far today, a small move higher, up over November 2020 low and up to test the moving averages above. Cable, aka sterling against the US dollar. A second indecisive doji cross on Friday with a cap variously made up from the 61.8% Fibonacci line of a June 16 to September 22 move at 132.46 and the August 24 high at 132.65. However, the real cap stretches from 132.84 up to 133.23 and possibly as far as the medium moving average up at 133.70. This is made up from a pair of head and shoulder necklines extensions, which are currently 132.84 and 133.23, of the May to July head and shoulders top and the August to October head and shoulders top respectively. This last head and shoulders top pattern is very interesting as it gave a primary target below in the 131.10 zone, which was reached 5 weeks ago, and a secondary harder to reach target X1 down in the 128.97 zone. Meanwhile, below we have some lightweight congestion between 131.10 to 131.44, possibly including 131.18, and it's made up from the December 2020 low at 131.33 and the July 23 high at 131.44 and the lesser Fibonacci line at 131.18. However, better support below from the dark blue, very shallow lower bear channel line, which is currently at 130.43, and that's up to July to date bear channel. Now looking further down, apart from the 50% Fibonacci line, the October 23 to July 24 move at 129.11, and the congestion in March between 128.52 to 130 even, which isn't that great. Well, we really don't have that much below if the market breaks the dark blue lower bear channel line, if it does that. The issue though is the market is taking its own sweet time in moving lower, and I'm wondering how strong that dark blue lower bear channel line really is. Is it tougher than the pair of head and shoulders tops necklines? Finally, much like Eurodollar, there continues to be one other feature here which I need to bring to your attention. It's something that I've said repeatedly since about March this year. We are set up for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between will have a lesser outside year pattern. As we enter December, it's time to look carefully at this potential very long-term pattern, and right now it looks like we are set up to achieve an annual key reversal up. Now, so far today, a lower open but looking again like an indecisive doji cross right now. if a little lower, and possibly setting up for a 3-day bearish tri-start pattern. US dollar against the Japanese yen. A lower but indecisive spinning top pattern on Friday after the previous session's hanging man pattern. The market seems to be having doubts now of reaching up to target X at 157.90. This is the primary target from the move up and out of the October to mid-November bright red ascending wedge pattern. A further harder to reach secondary target X1 is up at 159.65. Now, recent action had seen prices push up and out of the two patterns, though as yet we've not fully stabilized outside of them. The first is the dark blue July 24 to January 25 bearish shift pitch hawk. The dark blue upper time is below, and that's currently at 153.65. And the second is the bright red April to November bull channel. The upper bull channel line is below, currently at 155.46. Now, so far today, well, it was below, it's now slightly above. Now, so far today, a lower opener test down through the tip of the recent bright red ascending wedge pattern, and back below the breached bright red upper bull channel line, though not by far. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top on Friday, but it was also a bearish dark cloud cover pattern and a bearish double after the previous session's bullish harami. The base of the action was once again on the combination congestion between 706.32 to 706.57, made up from the 50% Fibonacci line of the October 22 to April 25 move and the June 23 low respectively. Topside we have the dark blue August to date downtrend currently at 711.04 and the lower trend line extension currently at 710.92. That's of the mid-January to late April descending triangle pattern. Now, so far today, an attempt lower, but hampered by the June 23 low and the 50% Fibonacci line. Below these, we have little apart from a lesser Fibonacci line at 699.96. The real support starts between 697.69 to 696.90. US dollar against the Brazilian real. A counter to the counter bearish opening black Maribosa and bearish harami on Friday, if only just on the latter. This after the previous session's immediate countering bullish thrusting pattern. The top side was capped by the green short medium moving average, currently 535.60, with further up the July 24 low at 536.76 and the August 24 low at 537.59. That is just ahead of the dark blue middle time of the December 24, which is currently at 537.99, and that's of the December 24 to mid-April 25 bearish shift pitch hawk. Meanwhile, below, well, the market was supported by the 38.2% Fibonacci line of the July 19 to December 24 move at 532.15. Now, below this, we have some space, though the mid-November closes at 529.07 or 529 to 529.78 might be problematic, but we otherwise have some space until congestion between 527 down to 524.07, though this is not necessarily that strong a congestion area below. US dollar against the Mexican peso. A key reversal down on Friday, which wasn't that much of an ask, as the previous session was an indecisive doji cross. But it was the second lowest recent close, and that's something to remember. The market continues to head lower out of the dark blue late September to early November shallow bull channel. Now, this had a primary target in the 1832.82 zone, which was already been achieved. But there's still a secondary hard to reach target X down in the 1809.60 zone. In between, we have the lesser Fibonacci line at 1817.60, which ties in with the September low, but then really nothing until the combined August 2017 and July 24 lows at 1759.58. Well, so far today, a small, very small attempt lower.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.